Looks like we're getting the numbers right now. Let's head right to the newsroom. Emily McCormick's got them.
Results for Apple's fiscal first quarter. We have an EPS beat here. This was $4.99, well above the $4.56 consensus. When we look at revenue, also a beat on the top line, $91.88 billion, also above the $88.38 billion expected. This was also an acceleration in revenue gains on a sequential basis. Last quarter, that growth had just been 2%. We're seeing a faster pace in the reported quarter. Current quarter guidance was also above expectations. Apple sees second quarter revenue in a range of between $63 to $67 billion. The street had just been looking for $62.33 billion. Also sees gross margin for the second quarter as much as 39%. That's above the street's expectation for 38.1%. Looking again at these first quarter results, services revenue, a little bit of a disappointment here, especially as Apple has been touting this segment for its gross margin capabilities, really trying to make this part of the Apple ecosystem. That was just $12.72 billion below consensus for $13 billion. iPhone revenue, though, was a beat. That was $55.96 billion, above expectations for $51.5 billion and above last year's $52 billion. Jen and Miles.
Emily McCormick with Apple's Q1 results. So, Dan, as we're going through the numbers here, I mean, the iPhone number, obviously a pretty hefty beat there. Little weak on the services. Wearables, just over $10 billion versus that 9.5 that people were expecting. What's standing out to you?
So two things, Jen, that stand out. So one, we just talked about the AirPods, and clearly they introduced the AirPod Pros in late October. They are supply constrained, so that's a good thing on one hand in that there's clearly demand, but obviously we want Apple to be able to meet that demand in the coming months and quarters. The iPhone franchise, I think what we can see here is that the price cut on the iPhone 11 down to $699, coupled with adding an extra camera, the battery life gets better for the Pro and the Pro Max. They're delivering value here, and that's in the context of what's, of course, a pretty soft smartphone market. And China is also something that, it's not firing on all cylinders. I think we could all agree. So those two I think are positive. Clearly the services, yes, a little bit lower than expected. What we'll look for in the next year is to get a little bit more information on how TV is doing, Arcade, their new gaming platform. So remember, as we talked about, it's a big business now. As we think about where do they create the next $50 billion of revenue. Anywhere well into the double digits is, I think, pretty good if you layer in the other pieces.
Well, and, I wanted to talk about that services thing because as I see it, and I guess that's why I was so fixated on the AirPods as I was thinking about the report yesterday, is that the AirPod is about what Apple does best, which is create hardware that people really fall in love with and creates new use cases for hardware in ways other companies can't. And services is a great business model, and it's very attractive for a lot of companies. But in a way, if they can just start selling, more and more AirPods, then they don't have to worry about whether the TV works to some extent.
Well, I think, Miles, I think it's both, and partly because if we go back to the iPod, right, going back in time here, there were MP3 players that were out before, but part of the magic was iTunes and being able to buy a song for 99 cents easily, quickly, in a cool, hip way. And so there was the service, and they clearly are monetizing most of that in the device itself. And you could argue same with the iPhone. The iPhone, their services like messaging, where Apple isn't charging you for. And so the services and the software, really the products, it's all within this Apple ecosystem. And that's the piece that's harder to necessarily feel or see, but that's what contributes so much to the user experience.
Yeah, the international, I guess the sales really outside of the U.S. was what got my attention. That 61% number that came in international sales, that's what the 61% of the revenue came from outside of the U.S. When you take a look at that number, we talk about the fact that Apple needs to increase their presence in China and needs to increase their presence outside of the U.S. Is that 61% number, do you think that's enough, or does that need to continue to grow?
I think if one looked out over the arc of time, then that number will continue to grow. Clearly, in the shorter term, given some of the headwinds and tailwinds, depending on which country you want to look at, it will bounce around. And also remember, the U.S. has been incredibly healthy for Apple. And so Over time, I would expect the 61% to grow. Over time, China, which is a high teens percent of revenue, you could potentially see a world where China is even bigger than the United States out many, many years. And that will, of course, depend on how China does and how the U.S. does as well. But Apple's really a global company in many respects. The products there's innovation happening all over the planet, and people are buying their products, consuming their services all over. So over time, I would expect it to go up.
Emily McCormick is going over the results in our newsroom, and she's got some more on China as we're discussing with Dan Flax here. Emily.
Well, one of the things that I wanted to point out that caught my attention, I know you were just mentioning the 61% international revenue coming in for Apple, but the proportion that we're seeing overall from China is declining. That proportion of overall revenue was just 14.8% in the first quarter. That's below the full year 2019 average of 17%. So this is something that analysts are definitely going to be homing in on during this earnings call as well, since we didn't get any mention of the coronavirus in guidance or how this is going to be affecting Apple, since China is such a huge demand center, especially on the iPhone side. And then looking also at the other hardware segments, we did see big declines for both Mac and iPad. For Mac, that sales number was just $7.16 billion, a big decline from the $7.4 billion we saw in the same quarter last year. And for the iPad, we also saw a decline to $5.9 billion after $6.7 billion in the same quarter last year. So again, seeing those other hardware sales outside of the iPhone really starting to decline and services ramp up.
Emily McCormick in the newsroom. Dan, listening to Emily talk about the sort of slowdown in China, are you surprised at this up to the guidance level? I mean, look, we just had Starbucks come out. I know they've had to close stores and are dealing with this more acutely right now in terms of the coronavirus. But it is an open-ended question how much this is going to develop in China. Does it go to where Foxconn assembles phones? Would they need to keep workers home? Do you think that Apple's kind of going out on a limb here, extending their guidance at a time like this when China is an incredibly important market for them?
I think, Jen, that the desire to give a little bit of a framing for the next quarter is consistent with what the company has done. Recall, even a year ago, they pre-announced negatively in the December quarter, and that ultimately proved to be around the low point for the year. But I think they're trying to help frame it as best they can. I think the management team historically has been very thoughtful about how they've gone about giving guidance. I think the issues are clearly it's tragic from a healthcare and a medical standpoint, the coronavirus. I think the issues that Apple and other companies are going to have to contend with will be, one, trying to make sure that their workers are safe, and in some cases the workers will be able to get to the manufacturing plants. In other cases, they will not. And then the other piece of it is, of course, is the revenue for Greater China. So Greater China remains soft. I think over the next couple of years it will rebound, and for Apple it's going to be driven by innovation around the products and the services. But yeah, I think China at the moment is subdued relative to where it's been in the past.
So right now we're watching Apple shares up over 2%. They were up nearly 3% in the regular session. You can see there adding on about $7.50.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.